This is a video containing this chapter, share and dividends. Actually, this first video will mostly comprise of the theory that is involved and the concepts that are involved, which can be asked and twisted when competency-based question. I'm not saying that this video will offer you something new, but the syllabus is same actually. But the aspect of looking to different things differently, it will eventually help you. If anyone is having any trouble in the conceptual part, this video might be a gem for them. I prepared these notes actually, and I will repeat that these are not some fancy notes with some glittery eyes actually. These are simple notes for the ICSE class 10, but the explanation will not be simple. It would be much more nuanced, and which will consider the all aspect which can be asked in competency based questions. This video will be not long. If you have already read this chapter, for revision purposes, this video will be good actually. If you haven't read something, still this video will be good. About the notes, if someone wants a PDF copy of these notes, they can join the channel, Telegram channel, on the WhatsApp channel, mentioned in the about section of my channel. Okay, let us start this chapter now. So share and dividends. Now the problem is that we have to first understand the soul of this chapter. Now this chapter is a very much important chapter if you say in ICSC, because every year the board weightage is also not very much actually, because it comes under the aspect of commercial mathematics unit actually. So the three chapters, GST, banking and share and dividends actually, these three chapters comprises of a tiny percentage, not a very big percentage, but these are scoring chapters actually, yes, including this actually. Many people prefer GST and banking because these are much more easier chapter, but this is also easy chapter with some nuanced concept if you understand it clearly, because this chapter comprises of two things actually. One is the mathematical part, which is a very easy, because just simple multiply, divide and percentages, basic knowledge of percentage of class 7th 8th. The mathematics part is easy. The financial part is very tough actually, because tough means it is new actually. The financial part, which is meaning of shares, at par, below par, so that's why this chapter becomes tough, but it is not that tough if you analyze it carefully. Let us now start the chapter. So we will first starting the chapter. So fundamentally this chapter is about ownership, proportional distribution, percentage investment return, basic financial mathematics. So also in class 10th ICSE, we will not do some hardcore financial mathematics, because the syllabus clearly says that brokerage and fractional shares are not in our syllabus actually. So we have to be very much clear that what we are studying. So let us, the first is the meaning of the share actually. What does the share means actually? So share, the basically real meaning is very much simple. A share is a unit of ownership in a company. If a company is divided into many equal parts, each part is called share. So in real life actually, when you start a company, supposedly you are starting a company, and a company needs funds actually. A company has been started, we will start a company, a happy company. So if this happy company needs some sort of funds actually, because in starting you don't have so much of capital that you can invest. So you actually, there are two ways, either to a loan or distribute your shares actually. So loan is also there, but for loan you should have a base, because you're just starting a company. Loan is very hard to get, so you actually eventually invest some sort of money about your loan, and and you divide your company into small parts, and the small parts can be purchased to the people investing your money. That money that they have invested will be used in the growth of your company actually, the growth of your company. And in average to that actually, in exchange of that, you will give the ownership of the company. Now ownership depends that how much shares they are purchasing. We will further discuss it. Ownership, basically you own a part of a company. When the company grows, their share values also grows, that is a market value actually. And also they get decision positions if the share is large, like who will be the CEO. Now this is not a part of our syllabus, but we can discuss generally actually. So the suppose total shares of a company is, supposedly it is written like that. Total shares are given actually, basically 1 lakh shares are there, and you own 500 shares. So your ownership now it is written in the latex form, which is obviously 0.5%, latex form actually. Now, so fractional ownership of company. Now fractional ownership isn't to be confused with fractional shares actually. Fractional shares are different thing. Here you own shares in whole number. You own shares in whole number actually. So whole numbers in this whole chapter, whole numbers is important actually. like your ownership share should be 500, 6, 400, whole numbers actually. That is important. Fractional shares like 7.5 shares also you can own, but this is not in the part of syllabus actually. Okay. So why do company issue shares? Company need, I have already explained this. This is instead of borrowing money, yes, divide ownership. We have already discussed. People who buy shares are known as shareholders, which is okay. Like it, this is a comic book type of chart. You can see I have made actually. Now this is not a lender actually. Creditor basically loan agreement, no loan agreement. This is the share actually. You can buy. And share obviously carries a risk. If the company doesn't go, your money can go down or it can be wasted. It may be wasted. Now important terminologies. These are very important actually. Face value, nominal value, par value. Now these three terms mean the same. In many ICSE examination, when it happens, these terms confuse people. Now these three terms are basically same. This is the original fixed value assigned to one share by the company, because it is denoted by F, or you can obviously F dot V. This face value. So face value means that the company originally decide the price of a share. Why it decide? Because we have to keep a reference frame. Like for in a number line, you have a reference frame like 0 actually. You measure the distances from 0. Like if you move towards right side, towards 3. Now 3 units from 0 and 3 units between 0, behind 0. So we have to set a reference point actually, so that whether a company is growing or whether a company is declining. So in starting point, we share a reference value of our share, that if the companies grow, the share price will rise. So we will compare that rise to a reference value, which is known as a nominal value, face value. This is a reference value. If the company goes down, so then we will say that a company is going down. Then again we will compare it to the reference value. So this is the reference value actually. Suppose the example rupees 10 share, rupees 100 share. Face values remains fixed actually. This is very much important point, that face value never changes actually. Market value or market price, basically MV. This is actual price at which shares are bought or sold. Now important is that we can also bought share and we can sold them also in the market, because market is a dynamic price. If a company is growing, if a company has a positive word of mouth, then share will be obviously grow. But if a company has a negative word of mouth, the share will decline actually. So market value is declining, it will be compared to the reference value, which is a face value actually. So now that is very much important. So now market value continuously changes on the demand of the company, whether the company manufacturing something is in demand or not. The profit expectation, economy, also investor psychology. Investor psychology means sometimes company is growing also, but investor doesn't want to invest on the company, because he says that the company is currently growing, but the investment is never done on the current growth actually. Investment is always done on the future growth, because if the investment was done on the present growth only, then no startup will get any angel investing, because investment is always done on the future projection, that my company will grow to that aspect actually. Let us now discuss at par, above par, below par. At par means when market value is equivalent to face value or equal to face value, it is at par. So this is at par. So share that sold at the face value only. Above par premium, when the company is growing, they can issue shares higher than the basically face value. Now this is the example. Now the company issues, it depends on the market also where it buys or not. Sometimes the company has issued a price and no one is buying, because then they might reduce also. Then when they reduce, it is called below par or discounted. When the market value is less than the face value. Now this is not a good condition. This means that the reference value is itself very high of the company. That means the company is thinking that they are not performing better actually. So this is not a good thing for the company, but for the investors this might be a good thing, that in future company grows, so they can sell their shares again. This is called the secondary sale to further. Now this we not go to the details of the financial things actually. Now this is a chart again. You can see it actually. Obviously these charts will help us to memorize or basically understand things, but we have to understand things. We will not memorize anything, because memorization actually will not helpful in this type of conceptual chapters actually. So now dividend, the real meaning. So till now we have discussed shares, values of share. Dividend is the part of a profit that the company distributes if it want to distribute actually. Dividend is never compulsory. supposedly is a part of a profit. Now, is a part of a company profit distributed among the shareholder. Suppose this is again the latex formation. Rupees 50 crore profit is there. So company only decide rupees 10 crore profit to distribute to the shareholders. Now, why 10 crore? Why not 50 crore? Because it depends that company want to distribute or not. Actually, it is voluntary action. It is not compulsory, and not all early startups distribute dividends, because if they occur profit, first of all, they never occur profit. Rarely it happens. But if it is even making profit, they will try to reinvest that profits into the company so that the company grows much. So company decide to distribute the rupees 10 crore. Not 10 crore distributed money is called dividend, because the money is divided, so it is called dividend actually. Now dividend is how dividend would be distributed depends on the ownership of a share and the face value only. Ownership of a share or the face value only. Suppose total dividend distributed, total shares is currently in the company is 2 crore. So dividend per share, if you calculate it, supposedly it is 10 crore divided by 2 crore, you will get rupees 5 actually. So we were this is the, so in rupees 5 we will compare that this rupees 5 is how much of face value actually. Then dividend rate is basically face value is 100, dividend per share is 12, so 12% dividend means, it is 12% dividend means that for each share you own, you will get 12% of its face value. And now why dividend is declared only on face value? Because market value continuously changes actually. So company also thinks that if they are accruing profit, we have to distribute the money. So we have, the distribution should not be ambiguous actually, because the market value always changes. Not always same, but it is dynamic actually. Still, so they decided to obviously fix it on the face value. Important dividend percentage, obviously market value no. Why dividend is declared on the face value? Because face value is fixed, we have already discussed. Dividend can exceed face value. Supposedly rupees 10. Now dividend is at 300%. Now looking at 300%, my people might think that's a very good deal. We will discuss further. So it can become 30 rupees. Why dividend is not compulsory? A company may distribute profit or retain its profit, which is choice. The dividend is not compulsory. Share owners are owners, not lenders. So we are not lenders. If we are owning a share, dividend is a voluntary choice actually. Number of shares purchased. Supposedly investment is there, market value, you can obviously, number of shares is simple formula. Number of shares is equals to how much you have invested divided by share market value of one share, which is market value of one share. This is a simple mathematical formula, nothing is special actually. Formula is this, which is, I will write again, which is I 1 M. Okay, dividend per share formula. If face value is given, market value is given, so we will actually dividend rate basically. So we will supposedly we are dividend percentage has been given actually. So it is d percent of face value. Supposedly 10% dividend is given, face value is 10 only, then dividend per share will receive 1 rupees. Again, annual income is simple, that annual income basically AI, short form we can write as number of shares into dividend per share, DPS. Okay, and formula has been given. Okay, rate of return or dividend yield, because rate of return, percentage return, actually profit return, these are all same terms actually. So it is depend on the investment. Supposedly you invest something 50,000, annual income is, so basically annual income divided by investment into 100, it is a percentage actually. And we will discuss this formula for the further mathematical treatment also. Direct formula is also there for the rate of return actually, which is okay, you just a very important formula. Conceptual difference, dividend rate based on face value used by company, rate of return, dividend yield. Okay, now in the next video we will do the questions, different type of questions actually. If this video is helpful and conceptual, share it and drop your feedback, criticism in the comment section.